we can produce between 4.5 and 5 million pounds a year, which is really a sweet spot for a project in the uranium space. Rate of return of about 26, 27% after tax, and an NPV at an 8% of over $200 million. We can make money in the current market. That's the crux of the company.
That's the crux of the matter. I love it. I'll send the check later. Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, please give us a thumbs up. It just helps us understand the companies that you think we should be spending our time, money and effort on. And do leave your comments below. That helps us with the sorts of questions you think we should be asking, how you think we did, and of course what you think of the company. You can also catch this as a podcast, an article or a transcription on cruxinvestor.com. And for our Crux Club early access members, you get to see this video first. If you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And for more videos like this, click the notification bell. We spoke earlier today to Stephen Roman, CEO of Global Atomic. They're a Niger-based uranium company listed on the TSX. Now, Stephen's got a track record of having produced and sold uranium into the market, which we find quite attractive. But they also came out with a PEA, which shows some remarkable numbers back in May. Market was quite attractive. Share price took off as a result. The highlights being a very low CapEx, 200 million bucks CapEx, high grade for, well, considering it's outside the Athabasca Basin at least, and 2 years to production. Now, outside of Cameco and Kazatomprom, not quite sure who's going to be able to match those numbers. So they've raised a bit of money recently to complete the feasibility study, looking to get their mining license by Q1 next year, and then talk about how, given the various options they have, they're going to finance the build of the mine operation. So take a look in the description below at some of the topics we discuss. A lot to go over there because we haven't spoken for a few months. Anything interesting in particular, click on the number beside the topic. That's called a timestamp, and I'll jump you to that part of the video, but enjoy what Stephen has to say. Stephen, how are you doing, sir?
Hey, Matthew, I'm not too bad, not too bad. Surviving COVID, everybody's healthy, and you know, we're getting back into the office, which is great, cautiously, but things are moving ahead.
I'm liking it. You picked up a suntan along the way, even better. I like it.
Well, you know, I get a lot of sun on top of this head.
Right. Hey, well, look, we've got a lot to catch up on, but for people who haven't seen this story before, can you just give us a 1-minute overview of the business, please, and then we'll pick it up from there.
Global Atomic Corporation, a Canadian company, Toronto listed, OTC, QX in the US, and also Frankfurt. We're a uranium development company. We've got a world-class asset in Niger, West Africa. But on top of that, we have a solid cash flowing zinc business in Turkey that we started in 2009. We have a super partner there, Befesa Zinc. They're the biggest in the world. And between us, we just built a new plant in Turkey, 2019. So that's now been commissioned and ramping up. COVID, of course, had a bit of an impact with zinc prices. So the price went from $1.10 to 85 cents. So we've told the market that we expect a 2-year payout now because of weaker zinc prices. And that project is actually providing us cash flow to finance the development of our big Dasa uranium project. So yeah, that's the crux of the company is a zinc cash flowing asset and a solid uranium development story.
That's the crux of the matter. I love it. It's good. I'll send the check later. So let's talk about this, because when we last spoke, you just put out a PEA, which was really, really well received. And I want to talk about that as well. And then subsequent to that, you raised a little bit of money to kind of move things forward. Okay, so those are the kind of main things that happened since we last spoke. So why don't you just remind people about some of the numbers in the PEA, first of all, and then we can talk around that.
Yeah, okay. So the PEA, and you know, compared to our peers who've been running their studies at $50, $60 uranium, we thought, you know what, folks, the uranium price is down around $25, and we expect it to go up. And as a matter of fact, it did move up about $10 to about $35 a pound. So we decided to do our PEA at a base case of $35 a pound, which is, we felt very conservative. I think by the time this project is in production, the price should be a little higher based on what's happening in the market. So with that conservative approach, we came up with a project, ramp access, mining high grade, in excess of 0.5% uranium, and producing a rate of return of about 26-27% after tax, and an NPV at an 8% of over $200 million. So, we expect, that mine plan will be optimized during our feasibility phase. And, with uranium prices moving up, of course, the NPV, the IRRs will move up commensurately with the price of uranium. But we can make money in the current market. That's the key. And with our cash flowing zinc business, it adds to quite a story.
Well, it is quite a story. I think people were kind of surprised that the CapEx is quite low, less than $200 million, and also the grade, which surprised. Did it surprise you?
Well, we knew we had a tiger by the tail here at Dasa. So, we made that discovery. We had groups like JP Morgan, Macquarie's, Investec all put money into Global Atomic when we were still private. This thing has really turned out to be something. It's now 250 million pounds. It's not drilled out, but what the great thing is that the cash flow we brought in from Turkey through our project there has defined an area we call the flank zone, and that's where we're targeting our initial production. And it's very high grade. Like 80% of it is running at over 1%. We've blended the grade down to about 5,300 ppm, or just over 0.5%. So that gives us a tremendous rate of return. We mine small amount of tons, 1,000 tons a day. We can produce between 4.5 and 5 million pounds a year, which is really a sweet spot for a project in the uranium space.
No, it's quite unusual. We put out a report on you guys, again, fairly well received, because it just kind of sort of set you apart from some of the other stories out there for sure. So we quite like the model you've created, especially with the revenue from Bethesda. But that hasn't started yet, really, because you built your plant, zinc prices have gone down. You're going to have to pay back that plant before the revenue start flowing. What's the timing on that?
Well, we thought we'd have it done at previous zinc prices in a year, but now we're saying 2 years. So we really won't start getting major revenue from that till 2023. That's the estimate at this point. Now we do get monthly management fees, sales commissions, so that pays a lot of overheads. But the big, annual dividends from production come out once a year post the Turkish AGM, when a dividend is declared. And, so far what we're doing is the project cost us about 26 million US, the new plant. We've already paid that down to about 23, 24 million. And we expect, over the balance of this year and next year to pay that all off.
Okay, interesting. And so let's talk about the market.
And important, Matthew, sorry to cut in there, that it's non-recourse debt to Global Atomic.
Yeah, noted. Let's talk about the macro a little bit here, because you said to me a second ago, we can produce at $35, but in the current climate, no one's getting financed, are they? So I know you raised a little bit of money, but it's a little bit of money. No one's getting the CapEx financed in the current market. So what are you doing about that? Why have you raised the money that you did? Because you could have raised more, but you chose not to.
Well, you know what? We like to keep dilution to a minimum, number one. We had a bit of a pop in the uranium price. We took advantage of it. COVID was there. Obviously, we said, we better put a little bit of working capital into the treasury. The stock ran up to about 70 plus cents a share. We did a unit offering at 60. There was a lot of people trying to get it at 50. We said, you know, like, this is not fair to be taking such a haircut. So we did a smaller raise, but it provided sufficient capital for us with the funds we had on board to finish all of our feasibility work, make our applications for the mine plan and all of that. So really, we don't expect to come back to market until we do project financing after we have our mining permit. I think that's very important for people to realize. You know, a lot of feedback I've been getting is people say, well, you didn't raise enough, you're going to have to come back to the market. Well, I don't think we will. Unless COVID lasts for the next 2 years and everything is stalled. But, you know, based on our schedule, right now we're going to be applying in August for our mine permit. If things go according to plan, we should have it by the end of Q1. And the funds we have are sufficient to complete all the feasibility work and get our mine permit in hand. So that'll be a big catalyst for the company after that.
That's quite big. I hadn't appreciated that. So that will get you through to when you start raising money to actually get this thing into production. Okay.
That's right.
That's impressive. That's impressive. So what are you doing with the money that you did raise? I mean, what precisely, how are you spending it? And I know you said put some in treasury, but you've also got to move things forward. So how's that broken down?
No, well, you know, we had then with that raising, we had about $6.5 million in the treasury, which basically we've been using to do our environmental impact study. So that's been completed. Now we're at the phase now where we have 2 public hearings. So one at site with the small villages in the area, and then one in Niamey. Once those are done, everything is submitted. We get a sign off from the environmental ministry. That goes in as part of our application for our mining permit. So on top of using funds to do that, we've been using funds obviously to complete all the feasibility work necessary for our development plan for our mining permit application. And then the balance will be used for some geotechnical drilling that's going to be required, and the final engineering and design for the mine and the plant. So, you know, we have sufficient funds on board to do all of that.
Okay, and there's a little bit of debt with Turkish banks in relation to Befesa. I mean, is that going to be rolled over? I mean, how's that being dealt with?
Yeah, no, that's a good point. So Befesa has basically sponsored Global Atomic, and we have a deal with them at about a 5% interest rate to carry our portion. And what we have agreed to is that we would use all the cash flow to pay that down prior to receiving dividends. So they've got 100% of the cash flow coming to them, aside from the management fees, etc., that I mentioned. And the Turkish banks, we have lines of credit in Turkey. We've been operating there since 2009. The banks, you know, they've been working with us. They like us. And so the lines of credit help us with our general working capital requirements in the country.
Okay. Now, tell me this. I want to talk about the market. Just briefly, if I may. Like, you're one of the few management teams that have actually produced and sold uranium into market. Okay. And I always say to my followers and readers that that's really, really important. So given that, what are you hearing in the market? What do you know?
Well, the utilities are sort of sitting on their hands at the moment, but it looks like they may start moving by, you know, mid next year, let's say. You know, there's U.S. elections in the meantime. Nobody knows whether Mr. Trump is going to be back in or the Democrats are going to be back in. I mean, either group have declared that they're positive about nuclear power. It's part of a clean energy solution. And so we think after these things are sorted out and clarified, you know, you're going to start seeing the utilities getting back into the market. spot-wise, we can always sell uranium in the spot market, but clearly, I mean, what Global Atomic wants to do is, once things are in hand as far as our mining permit and our development plan, is that we would meet with utilities and sign in some longer-term contracts so that we can project finance the Dasa.
Okay. Are you hearing anything about the Russian suspension agreement? Because it seems to be all quiet on the Western Front, as far as we're concerned.
Yeah, I haven't heard a lot. Maybe you can shed some light on that one.
Not yet, not yet. I'm trying. But okay, so I think that's a very similar picture to what we're hearing on the street, as it were. The fact that utilities are biding their time towards the end of this year, and I think in the beginning of next year we'll start talking to companies, trying to understand what is possible and what's not. And there's a few companies that seem to be positioning themselves quite well for that, but that may come a little bit too late for a few others. So interesting times for sure. So the rest of this year is head down, get on, control what you can control, and I hope that is enough.
Well, you know what? This year we will be busy. We've put out RFPs with groups that are interested in building the project. So that's all part of our work plan going ahead. So we've been reviewing those. We've been doing a lot of meetings with various groups from various locations that are interested in building the mine and the mill, getting quotes, building up the team capability in country as well. So, all of this is ongoing with the anticipation is once the mining permit is in hand, we will want to move ahead fairly quickly.
Okay. When's that again? When's the mining plan? When you think you're going to have that in hand?
So our schedule right now is by the end of Q1 next year that we would have it in hand. We're hoping that we can move that ahead, but Niger is also having a presidential election. And so campaigning is going to start there probably in the fall. That's why we want to get our permit into the government by August, so that at least they have their initial review and they can give us a bit of a heads up on when they think it could be issued. Okay.
Well, all sounds good. I think you've been motoring along. You're building something quite nice. The market seems to like what you're saying. And hopefully this COVID situation does clear up for all of us, and we can move on with business as usual. So I appreciate the update. Stay in touch and let us know how you get on. Pick up the phone. We'd be delighted to take that call, Stephen.
Thank you very much, Matthew.